Thanks, Caroline. Happy to host the first session of day 2. Great to have a scene setting in the beginning. So welcome everybody. So my name is Kilian Thalhammer, Head of Merchant Solutions at Deutsche Bank. So responsible there for everything about payments, means issuing piece, payment acceptance piece, but also our fintech and platform sales business. So our session today is about treasury transformation and e-commerce models. So give you a little bit intro about the structure of our session. We have first a 10 minutes presentation by Marion. Marion Lebur is covering payments, digital currencies, and fintech at Deutsche Bank thematic research team in our research team. So I think we're getting a quite good background, really a lot of information about what's happening in the treasury space and what transformation means. After that, we're heading over to Mila Harger from British American Tobacco, Head of Cash and Banking there, and we're doing an interview, a fireside-like chat about treasury transformation at BIT, what the challenges are, and how they tackled all of that. So saying that, I want to hand over to Marion. Happy to take any questions. I think you have all the ways to send it to us, and we reserved roughly 10 minutes at the end of the session to go through any questions we have to the audience. So Marion, handing over to you.
Good morning, everyone, and many thanks for the invitation. I'm very glad to be here. So today I'm going to talk about the main trends and the various transformation across countries and sectors. So at Deutsche Bank, we conducted a CFO's treasurer survey, and we collected over 10,000 data points. So we interviewed more than 200 CFOs and treasurers in Europe. So I have summarized in the next few slides the key observation and the main transformation that we are seeing in this space. So COVID-19 disruption to business has definitely reshuffled priorities for CFOs and treasurers. So they must address how to maintain access to liquidity and credit, implement backup procedures, create visibility to total cash global locations, determine cash requirement in the short and medium term, and assess current exposures. So transforming business models is a key theme emerging from our survey, and we can clearly see 4 discernible trends. The first trend we are seeing is the entrance of traditional B2B business in the B2C and a clear growing interest in e-commerce. So e-commerce rose more than 50% in Europe since March last year, and we expect a sustained online volume growth of more around 35% globally in 2021 and 2022 compared to our pre-COVID level. So this will trigger the need for innovative collection solutions. The second trend that we are seeing is a move toward real-time treasuries. So CFOs are willing to monitor and to be notified about real-time account balances. And they believe that instant payments, APIs, and open banking will be the technologies and services with the biggest impact on B2B payment over the next 2 or 3 years. The first trend that we are seeing is the usage of cash applications. So automated accounting and reconciliation system and e-invoicing technologies are expected to increase in the next coming months. And the final and the fourth trend that we have seen is the centralization of cash management. So treasurers are willing to rationalize bank accounts, and we found that between 20% and 50% of treasurers intend to implement virtual accounts this year. So COVID-19 disruptions to business has clearly reshuffled the priorities for CFOs and treasurers, and executives surveyed reported potential efficiency gains in few sectors. So we had around 0.5% of executives who consider potential efficiency gains from cash flow forecasting, and this is the first and by far the main potential efficiency gains. The second one, so we have around 1/3 of CFOs who were reporting bank account management as a source of efficiency gain. 1/4 of CFOs reported invoice processing, and 1/5 reported payments, receipts, and reconciliation as a potential efficiency gains. And we had less than 15% of CFOs and treasurers interviewed who consider potential efficiency gains from purchasing order processing, spending management analysis, initiating payments, and managing fraud and security. So now let's see what we found in terms of the top challenge. So I'm going to deep dive on the top challenges. So in our survey, CFOs and treasurers reported a few top challenges. And the first challenge that they have been reporting is protecting against fraud and security exposure related to their payment activity. So just to give you some background information, global losses from all kinds of payment frauds have tripled to $33 billion last year from $10 billion in 2011. And for example, we had EssilorLuxottica, we discovered nearly 200 million fraud euros last year at its Thai plant. The second challenge that we are seeing is the reduction of time spent on errors and current manual payment. So regarding cross-border B2B payments, 60% require some kind of manual intervention, and each are taking at least 15 to 20 minutes. Third challenge is managing bank KYC and documentation or other compliance issue. The fourth challenge is obtaining timely access to all transactions occurring globally. And almost 54% of treasurers believe that one of the pressing issues in cross-border payment is to trace payments in the case of problems. The fifth challenge is keeping up with technology changes. And according to Google, just during this pandemic, the number of phishing sites registered was 2 million, so basically 20% more than a year before in 2019. And the sixth challenge is transitioning out of legacy payment solutions. So of the treasurers that we have surveyed, 51% encountered check forgery in 2018 with and an actual loss rate of about 18%. So what we are seeing as well is that dematerialization is clearly underway with the widespread use of bank transfers, direct debits, instant payments, and online bills. And there is a clear push toward a cashless society, which is further fueled by the following innovation: instant payment, API integration, artificial intelligence, and automation. And we can clearly see these cut-off times to vanish as operations are carried out 24 hours a day and every day of the year. So there is a very clear move to real-time solutions. And what we found in our survey is most companies have used same-day ACH and Swift GPI. And most of the rest are planning to make this move within the next 6 months. So this shift is a response to probably the top 3 challenges that we are seeing related to paying vendors. So the first one was timely approval of invoices and payments details to meet standard payment terms. Second challenge is managing and updating vendor bank account details in an efficient and very organized manner. And the third one, bank and KYC documentation or other compliance issues that cause significant delays and confusion. So looking ahead, most payments, I mean B2B payments, will become digital. Bank transfers and instant payments will become the norm, while payment via check and cash will continue to decline. So as you can see on this slide, here we can actually see good reasons to think that cash and check will disappear in the medium term for corporate use. Both means of payments are losing momentum to dematerialize payment. So during the last 6 months, just to give you some rough numbers, only a fifth of companies use cash and only 2/5 use check. And what is interesting, it's when you ask CFOs, treasurers what they think about the future, all of them believe that checks will disappear in the medium term. And there are probably good reasons to stop using that. The checks. First reason, it's probably because 60% of treasurers consider fraud as a top challenge. And in 2019, the annual value of check fraud losses in the UK reached £54 million. Second reason, 70% consider manual processes a top challenge. Third reason to stop using check is 70% think that managing all the bank accounts is a top challenge. And final reason, check increase the time required for cash collection. So again, long term, all payments are and will become digital. What we have seen as well during this pandemic is a clear shift towards e-commerce, and it's really a notable phenomenon from COVID-19. This acceleration, this digitalization of commerce and the future growth in the merchant payments market that it entails. So it's one of the lessons of the crisis that this is certainly the real birth date of the internet mass market consumer. Biggest rise in terms of e-commerce were in Anglo-Saxon countries, mainly the US and the UK. And looking forward, with the recent surge in new online shoppers and roughly half of them typically converted to repeat users, we expect a sustained improvement in online physical goods volume growth over 35% globally in this year in 2021 and next year in 2022 compared to what we have seen pre-COVID last year. Thank you very much.
Thank you, Marion. So quite interesting insights, and I personally like these that we see here, the combination of between long-term trends who are driving the transformation of Treasury, I think, over the last years, combined with short-term influence over the last 2 years coming from the pandemic and COVID, who also act in this area somehow as an accelerator to driving trends we all somehow had on the plate also before COVID, but now the chance to become reality is much bigger. So thanks for the insights, and happy to take any questions at the end of the session. So handing over from the numbers more or less to a real-time example. So happy to welcome Mila Harger here. Thank you for your time and the openness to share your insights and answer the questions as part of our panel. So welcome here, and maybe start with a short introduction from your side and a little bit about BIT and what drives you in the part of in the area of Treasury transformation.
Hi, I'm Mila. I'm the head of cash and banking at BIT. So I'm responsible for the account management, liquidity structures, transaction banking, and working capital. And recently we've moved the area around our digital payment providers underneath corporate treasury. So that also now sits with me. As a bit of background for BIT, we've had an evolving strategy which became a little bit sharper from around about March 2020 to focus on our new category business. So that's a real driver within the group to increase the revenues at a faster rate than our traditional business. And a lot of the levers to help us do that is around B2B online and B2C online. Now, so that's really where we've started that treasury transformation agenda with bringing digital and e-com under the umbrella.
Okay, when you look at transformation in general, where do you think is real transformation starts, and what drives transformation, and how do you see it differentiated from the normal day-to-day changes that you have anyhow? So is there a clear border? Is there a clear driver where you say, okay, this is really transformation in my business, and that is normal day-to-day business?
I think for me, the difference might be there may be continuous improvement within your department, whether that's within Treasury or any other department in an organisation, versus this has been a pivot by the entire group with a lot of communication to the market around how we're going to achieve the targets that have been set. And so it's throughout the organisation where we are having to transform to both support those targets, but also to really evolve with that digital roadmap through the group. So to me, that's sort of a differentiator. Is one, I can internally look at how can I improve. The other was a much bigger pivot within the organisation based on external factors as well.
Okay, and if you can give us a little bit insight, what triggered you to start the transformation process? Was that more strategical high-level topics, maybe some of the topics that Marion also mentioned in the slides before, or was there an operational need or pain where you said, okay, now we need to start a more larger, bigger transformation project or phase within BIT to tackle these challenges?
I think it was both. So there is, as I said, the broader transformation for the group. So to give a little bit of context in terms of what we're trying to achieve, we hit 1.5 billion in revenues end of last year for this new category line, and our target is 5 billion by around about 2025. So we've grown our consumer base around 3 million last year to 13.5, and this year in Q1 we've already hit just under 15 million consumers, with again a target of 50 million consumer touch points by 2030. So that's a very aggressive set of targets that the whole company is looking towards. But at the same time, while you are, in our case, pivoting from a more traditional sales model into these new online or digital enabled sales models, there are operational issues, of course, you have to deal with along the way. So it was really both, because we need to ensure speed to market as well as reducing any risk to the group.
So you also mentioned that the e-commerce model, which is also the context of our session today, play a relevant role in that transformation. Can you go a little bit deeper and say, okay, what does including e-commerce model in your day-to-day treasury work means, and what type are triggered, or what transformation part is triggered by the e-commerce model? So what are the challenges, especially about e-commerce?
I think it's from a challenge perspective, and it may be different for different organisations, obviously, who are maybe already in B2C, but for those organisations that haven't been traditionally, it touches a number of points, not least of which your policies and procedures, your team structure and the skills that you have within those teams. So you might want to cast the net slightly wider in terms of what your team makeup might be than traditional teams within corporate treasury. Your partner strategy. So are you looking at increasing your partners to manage directly, or you want to bundle those through existing partners, and also your products? So understanding how those different products work, where the liability resides, what the benefits are, and how they work within your risk appetite. So it's a new world for some parts of the business.
Yeah. So what was the main driver from your side to decide, okay, we go more into because that was one of the trends that also Marion mentioned in one of her slides, that B2B businesses entering B2C businesses, that's also treasury topics on the table. So what was the main driver here to really, at the end, shortcut a little bit the value chain and directly addressing the end consumer? So what was then the business motivation of BIT behind that discussion?
It's a couple of things. So one is that we've obviously normally a single category business, which has certain restrictions on it, and moving into multi-category and being able to support that adult consumer switching journey directly with the consumer is one thing. But the other is also looking at, you're starting to get a lot of overlap between smaller, say, retail stores. They are online as well. So, we want to play that stream through B2B and B2C, and COVID certainly accelerated that journey, I think, as Marion called out in one of the strong trends. So physically being able to deliver stock to some of our partners, physically being able to collect payments, it helped accelerate that journey in some of our markets to B2C.
So from my point of view, I think a transformation is always some kind of a journey. So it starts and hopefully there is an end. Maybe there is never an end, because there's always a lot of things to transform. But can you describe a little bit how this journey was from your side, from your organization side? What was in the beginning of the journey? What was in the middle? And how do you think you can come to an end of the transformation? Or maybe if it's the other way around, when you see it goes back to normal in that context, that transformation never ends. So how was this journey for you and your organization?
So I think it's fair to say that we haven't finished that journey yet. I mean, we've certainly got some clear milestones and targets that we're hitting along the way. But I think to look back and say what might I suggest we would do differently would be, you kind of want to map out what products you're wanting up front, with not necessarily just your treasury function or marketing function, but to understand what they are. And that can be a tricky business, given this is a really fast changing area. What you also have to understand is that within the stakeholders, you can't always control timelines, as you may have traditionally when it may have been more of a Treasury-led conversation around what you want to do with your liquidity structures or what you want to do with those internal mechanisms, because this is really tied to the consumer's expectations and the customer's expectations in terms of that timeline for transformation. And also understanding upfront what risk appetite you have versus the flexibility you want to achieve, and what your partner strategy is, so consolidated or taking the best of breed by market.
If you look a little bit back, what was the biggest surprise on your side during this transformation? So positively and maybe also negatively, I said, okay, this is something I did not expect, and this is something where I would maybe do it differently if I would do it again. So what was there on the surprise side? An interesting piece.
I think in terms of a surprise side, or maybe not necessarily knowing going into it, is that your approach and what needs to knit together to your existing policies and procedures, those links may be more tightly or less tightly managed, depending on if you're approaching those services through an existing partner, such as a core bank who is essentially third-party resourcing that through to you, or where you are going through directly to those partners directly. So you need to bring the rest of the organisation along with you, and that includes your legal teams, that includes your marketing teams, and also your back office shared service teams if you have them, because if you're going to centralise certain decisions, then everyone needs to be aware of what the implications are, not just within corporate treasury. So, and as you go along and learn, they become highlighted as issues that would have been great to know up front.
How do you, doing such a transformation, which normally takes not weeks, more months, or sometimes also years, how do you see the impact on the people and the culture of your organization? Was there any significant change, or was it more or less also actively triggered by your side to say, okay, how we bring the people on board, and maybe also change the approach, how to work, how to tackle that, plus discussion about, is this also a transformation of my day-to-day culture, working culture, and also personal culture?
I think in a broad context, from a cultural perspective, where we've certainly seen change is what you want to hold centrally and what you devolve to, say, your end markets or your regions for speed and decision making, and also that responsibility around that decision making. That the traditional concept of a team is not necessarily obviously your hardline report or within your team. It's around the huddle and the greater focus on what's the objective that you're trying to achieve, and that's the team, including your external partners. The speed that you need to either respond or have already looked ahead of time to be ready with, if you like, a bit of a menu for different factors in the business to be able to select from. And also, I think a broader change in viewing a payment method from something that you just manage or technically enable the flow of funds through to a strategic building block within, say, revenue growth management, or how you are creating an engagement with your consumer or your customers. Okay.
We saw also in Marian's slides some tech topics also as part of the transformation and as part of trending topics for treasurers in the future. What was the role of tech in your transformation, and what tech topics really drives you and said, okay, this is really a leading topic in my transformation? And maybe also the other way around, which tech topics do you say, okay, they are not so important, they are not so relevant in your day-to-day transformation job?
Okay. Within the, I guess, framework of e-com pivot that we're going through, I think tech is clearly important. I think what's even more important than tech is understanding the capabilities and the outcomes you want to achieve. I think sometimes if you're talking about the tech specifically, then we're sometimes missing the boat on the conversation we need. But in saying that, your teams, and this comes back to skills and also just experience, need to be comfortable with tech. So potentially, historically, in some Treasury teams, there's been less involvement directly with that tech or that digital aspect of it. And now it really is, you can't really tease it out of the service. It's inbuilt as part of that service, so you need to be comfortable end to end. And in terms of that change and what it can mean on a processing side, is also understanding not just the front end of that tech and how I process a payment, but how do I actually receive it into the account? What level of visibility do I get? How do I support my reconciliations, which I know, Marion, you called out as one of the concerns. And also understanding where the liabilities sit now with frauds, you know, on payments, chargebacks or refunds. So there's a lot more granularity when you pivot towards B2C in terms of what you need to manage, and tech can be a great enabler to either help reduce the risk or, you know, manage manual output.
Okay. Did you have during your transformation or looking back in the last months or years, do you have any specific KPIs where you can see, okay, this is my more or less transformation dashboard where I say, okay, this runs good, this is not running good. Are there any special or maybe new KPIs you did not have before? Or is that more or less the classical business KPI you also had before and there was no transformation on the KPI side? So did that change?
There are broader, certainly KPIs within BAT around how we're managing that digital transformation. I think specifically within Treasury, it's how we are bringing those markets into scope and how we're supporting them through those services and the providers. So we've got 74 markets across 53 countries where we're now selling new CAT and supported heavily by e-com, B2B or B2C. So it's really bringing for us, had we aligned our policies and procedures? Do we understand our partners? Do we understand the risk and the outcomes we want to achieve? And do we have that strategy around what I need to do for the next 18 months to support my other business partners? So for us, they were sort of the high level strategic KPIs rather than, say, transactional.
Okay. When is there anything where you said, okay, this was a goal for BAT or for you to achieve in the last time, or maybe also in the future, where you came to a conclusion that is maybe not achievable, too hard to crack? Anything where you said, okay, that's really a big thing. Yeah? So if we crack these things, that would be maybe a big achievement. Or on the other way around, you see, okay, that's maybe too complex. So because in theory you can have a lot of things you can do better, but in reality you see that sometimes it's not worth the effort or more complex than you thought. Is there anything where you said in the beginning, yeah, this is something we could change, and then later on decided, maybe that's not the way to go?
I think a couple of things would be, there's been a drive obviously across the industry to rationalize accounts, to rationalize partners where you can, but within this area, that's not always achievable. So if you're going in with a target of, I want one global provider, or I want something that's, light touch to manage, that's not always going to be achievable. So what we've looked at is, where can I go, if you like, globally as a partner? Where will I have sort of regional family and friends? And where am I going to have those local variants? So that has should have adjusted over time. And I think the other thing is helping to set expectations so that there aren't the surprises around. It's not always our terms that we're going to be working on. It's also going to be some quite specific terms with these types of partners, depending on what you're trying to achieve in a specific end market. And that's quite fluid.
Yeah. Okay. Got it. Yeah. That's not so easy to tackle because not so tangible. If you look into the future, maybe also have in mind what Marion has in the slides about future trends. Is there a topic on the rise for you where you said, okay, this topic or this trend will trigger my next big transformation process?
Within my space, not necessarily specifically with ecom, but within transactional banking, certainly high on our agenda is the KYC management and also the visibility of payments through the network, either receipts or payments, and also the account management. So we've got a lot of centralization on that for the accounts, and we've rationalized a lot, but also helping us to manage from beginning to end, and taking advantage of these new solutions that are coming out to make that less physical and more seamless, really, and where possible, more real time, as you say.
Okay. Yeah. if you would give to the audience and maybe to other treasurers or whoever is on the audience an advice regarding transformation, what would be the 2-3 things where I said, okay, if I would do it again, this is really, really important, or if I would have the same challenge again, these are the main things I would consider in an advice like style. So what are your takeaways there?
Yeah, so not necessarily if I do it again, but certainly lessons learned would be being really clear around what those objectives are. So being sort of, as I said, quite sharp on what you're trying to achieve for what purpose, being clear through communication lines, why are we trying to achieve this, so that everyone can buy in, so you bring the team along. That also leads to, I think, a really key point around having the right team, and I've been very lucky with that within BAT, but it's not just your team you directly manage, it's also that broader huddle and the concept of which partners are you bringing into that conversation early, and it should be quite an open conversation, not necessarily saying, I want this, but this is my problem, or this is what I want to achieve, and sort of whiteboarding with them what you can do. The other aspect on those transformation areas would be, again, casting your net quite wide to understand what products and solutions you can look at based on what that clear target is, but it always needs to come back to the objective of what you're trying to achieve. And that may change over time, but at least you've sort of set that course pretty clearly up front and everyone's clear about what they're working towards.
Okay. Yeah, so I think it was really a quite good insights, and thanks for your openness and sharing all your views on treasury transformation, and also on the e-commerce model. So we received a lot of questions through Slido, and I want to directly jump over to the question part here. I think some of them are for you, Mila, some of them are for myself, and maybe also some of them for Marion. So let me start with one for you, Mila, directly addressed to you. How does the partial move from B2B to B2C affect the credit profile of your business? Improved payment terms, or enhanced credit risk, or a combination?
Well, this is an interesting one because it's particularly depending on the industry that you were in. So for the industry, you may have already been very heavy with, say, payment on delivery or prepayment terms. With your B2C, again, it comes back to the model that you're applying. So are they prepayment terms? Is it payment on delivery? Or are you looking at certain products like payment splitting or essentially micro factoring? So you're providing, consumer financing. So I think it comes back to what products you are going to offer, and that also comes back to the consumer and the customer's expectations. So I can't give a hard and fast answer to say that it's changed one way or the other for us, because it can be very market specific based on what those consumers expect, what the customers expect, and also what your competition is doing.
So second one is more or less to myself. So what is Deutsche Bank seeing from its other customers? Is this a common request to support corporates with their e-commerce transformation? So the easy answer is yes. So there are a lot of requests from our corporates, from our customers, to support them in general on transformation. So e-commerce is not the only trigger, not the only thing who triggers a transformation from our customers, but I think the most obvious one. And I think we also see different type of e-commerce, because e-commerce does not always means B2C. There is a B2C e-commerce angle, but there's also a B2B e-commerce angle. So we have two types of triggers. On the one side, what Marion also mentioned, and you also, Mila, that a lot of B2B companies go into B2C, and they see that the business processes and also everything from the treasury part also to the business line has a lot of new challenges. So and on that side, corporates are talking to banks like Deutsche Bank with supporting them. So that's one piece. The other piece is also bringing B2B business into the e-commerce world. Sounds a little bit weird because e-commerce is not totally new. So e-commerce is there now for 20 years or something like that. But there's still a lot of B2B processes who are not digitized, who are not in the digital world so far. And I think over the last years, we see a lot of development in this market that large corporates open up sales channels and becoming more and more digital. So it's a common request, and from our side, we are happy to take this discussion and help where we can with advice, but also with products. So that's quite normal, and we expect that this will go on over the next years. So nothing that will end. So next one. So I will hand it over to you, Mila. Also happy to jump in later on, but I think it's more from a treasury perspective. What do you expect be the role from a treasury point of view of CBDC and decentralized finance in the future? Is there something you have on your plate, and if yes, in which context?
I think we've open to the conversations about it, but I think the ET is pretty cautious around looking at these areas. So we're understanding what's happening in the market, but for us at the moment, it's probably not expected to play a significant role right now around the CBDC. For the distributed finance, again, it comes back to really the models that we're going to look at and going to pursue going forward. So we're always in conjunction with that.
Yeah. That's more or less the same on our side. I think in general, the area of CBDC and all these also decentralized finance is nothing but you cannot look at from a bank perspective. That would be not the right approach. But there's a lot of different contexts as you can look at these topics and roles you can play, the business model side, but also the technology side. So a lot of things are coming up there, and it's an interesting space. We closely looked at that. Next one, also somehow related to that area, and happy to take that questions directly. Do you think cryptocurrencies have a role in the future or in future as payment methods? So from my point of view, I think cryptocurrencies and payment methods are two different things. I think cryptocurrencies on the one side is, as the name said, a currency-like thing. It's really handled like a currency. In some areas comparable to the centrally issued currency we all know. That means from my point of view, cryptocurrency is not a payment method. I think the existing payment methods we all know from the market, card-based payment methods, bank account-based payment methods, wallet-based payment methods, they all now find a way how to deal with cryptocurrencies. We see it on PayPal, for example, as one of the major payment methods. They included cryptocurrencies as part of the ecosystem. So not as a payment method itself, but as a way to use Bitcoins and others to pay. And I think the same thing will happen in all the other payment methods. We see it on the card side. Also, Visa, MasterCard have the first cards also are quite linked to cryptocurrency. And I think these worlds will be coming more and more closer together. And that will be there. It's not the one payment method against the other. So that's my view on that. So maybe Mila, you have a view on that topic.
I think it sums it up.
Yeah.
On that
okay.
one.
So next one, more treasury like questions. How do you or treasurers forecast for liquidity inventory in such uncertain, unpredictable times? So maybe something also for you to give a little bit insights as far as you can do.
So I think with as you said, unprecedented really historically. So within our group, this was managed very stringently across our regions in conjunction with operations and marketing and the finance teams, to understand what was happening in each market as it happened. So based on our geographic footprint, you couldn't really just take a stand back and say, what's the generic position on this? Because it was quite specific, like some markets. And because we also source or supply into different markets from different factories around the world, that also had a subsequent implication on that. So that was a lot of communication during this period of time. There was that strong view throughout the group that we had to manage it this way, and also work with the regions very strongly. And from a liquidity perspective, it was really understanding what was happening on our receivables and our payables side, and managing that very strongly. From an inventory perspective, it was also supporting our vendors throughout the network, either with payments and or agreeing up front what we were able to obtain from where, to ensure that we had that throughput into the supply chain, and then managed our own inventory as well, pretty strongly off the back of that.
Okay. And Mario, maybe one from your side. If you look at the numbers you presented and the trends you see from your personal point of view, what of these trends do you see as the most challenging for treasurers? And on the other side, the ones who has the most influence on the day-to-day business of a treasurer. So how do you see the numbers you saw on the slides from a personal point of view?
Yeah, what I think the biggest trend that we are seeing is clearly, I mean, the first one is traditional B2B business entering B2C, and a clear growing interest in e-commerce, and especially during the pandemic, because it has surged by 50% and in most countries. And I would say the one trend which is challenging is probably like looking at real-time treasuries, cash application to monitor on a day-to-day transaction.
Okay. So last one, so a little bit more concrete one, more specific one for you, Mila. What are your views on fraud levels especially on the e-commerce side, and how is SCA resolving the risk? Was SCA really the solution of an existing problem, or do you see any influence on that? Is there any numbers you have there, or any views on that topic, SCA?
Yeah, so I think the strong customer authentication requirements are key, and for us as well, we have, as you can imagine, certain age gating requirements, so they kind of go hand in hand. I think it's really important also within the Treasury space that if you're taking this on, to understand how those authentication methodologies work and what is appropriate within different regions and different end markets, because the way fraud occurs through whether it's B2B or B2C can be quite different. If I'm in LATAM, you know, with someone using an IP address through the US versus what's happening in Europe, where you have different regulation under PSD2 and in the standards. So I think that's quite important, and it's also quite important to understand how that also impacts on the liability and the risk that you carry within those transactions. So to give you an example, in Europe, if it's merchant initiated transaction, off the first transaction, your subscriptions are relatively secure afterwards. In other jurisdictions, if you don't, say, have that human verification step per transaction, even if merchant initiated, it is not protected from chargebacks. So you do need to understand what you're trying to solve with the SCA you've got in place versus what else you might need within different jurisdictions, even for a similar sales flow with similar payment methods.
Okay, so thanks everybody. I think we covered, as far as I see, all of our questions. So quite good, also from a timing perspective. Something you, Mila, or you, Mariam, want to add for the session? So some important statements we maybe missed, or some message you want to go to the audience? If not, then thanks everybody. I think just a reminder for the audience that the session was recorded, and is also available on demand. So please contact ACT, the organizer, if you want to see it, and maybe take rechecking it. And thanks everybody. I think it was a quite good and smooth session, and happy conference day for everybody. I hope we had a good first session, and yeah, have a great day to everybody. Thanks, Mila. Thanks, Mario.
Thanks very much. Have a lovely day.